Have you been wondering how these mortgage interest rates have started to affect you? Should you be buying a house right now? Should you hold off? Well, stick around and we'll discuss it a little bit. Good day, everyone. And if you have not met me before, my name is Hudson. I'm a real estate agent here in the Las Vegas area. And every single day, people reach out to us for their home buying needs, their home selling needs, or other information about the process. And if you need that type of information, just call, email, or text, and we'll get right back to you and make sure that all of your questions are answered. Also, if you find this information helpful, go ahead and hit that subscribe button below. Let's be very honest. Things have just gotten really strange lately. Interest rates keep going up. For some odd reason, overall prices of houses have gone up, even though they have slightly declined over the last month or so. All indications say that they're going to start sliding sideways for a bit. So some people are sitting on the fence saying, well, I'm just going to wait until the prices fall. Well, I hate to sound like a used car salesman, where when you get in there, all they want to talk about is your monthly payment and you're thinking about price. Well, this is a situation where sometimes you want to think like that. And the reason I say that is there is a whole set of like calculus, like 3D and 4D chess that you have to start thinking about. Well, great. What if prices fall? Do you save any money? What if interest rates go up some more? Interest rates have had a slight retreat over the past week because of fear of the economy. Well, that's kind of good if you're out there trying to buy a house and get a loan and everything. Well, what happens in the future? The Fed has already indicated they are still going to continue to raise interest rates in response to our overheated economy. And with 8.5% or more of inflation, that's one of their core tenets, that they have to control that inflation. I mean, look at it. They're already saying that the COLA for people like on Social Security and stuff may be as much as 10% for 2023. Well, the government wants to slow that down. And one of the ways they control that, really the main way, is through interest rates. And they're going to continue to raise interest rates, which means that interest rates that you may end up paying for a house will go up. So even if the price of the house were to go down, you may end up in a situation where the amount you pay has gone up. Now, let's go ahead and look at some data so we can kind of back this up and see where I'm coming from. So let's go ahead and take, let's say, end of June, the median price of a house was $480,000, down from $482 the month before. Just a slight decrease, but let's go ahead and see what would have happened based on interest rates. Now, if we take that $480,000 house and let's say you do 5% down, your loan is going to be about $456,000. Well, let's just look back a whole year ago. The average interest rate was 2.9% this time last year. So your payment, not including taxes or insurance or anything like that, or in a case with 5% down, you'd have what's known as PMI, your payment would have been $1,898. Okay. Now, take that with the interest rates that we have today. Right now, with this big retreat we've had over the last week, interest rates are about 5.3% nationwide. That's going to vary, and we can actually get into the Las Vegas numbers here in a second. So when you do that, let's go ahead and look what your payments would be with that. So with 5.3%, with that same $480,000, your payment is now $2,532. Now that is a car payment right there, just in that interest rate. Now let's start getting into a little bit of history. So we talked about the interest rates being 2.9% a year ago. Well, what was the median price of a house? It was $395,000. So $85,000 less than it is right now. Now, with that interest rate, 5% down, your payment, if you purchased a year ago, would be $1,561, almost $1,000 less than a payment now. So if you'd been sitting on the fence, you're paying $1,000 more at this time. Now, let's pretend that interest rates reversed a little bit, kind of seeing how interest rates really affect this as much, if not more, than the prices. So this is why you have to look at the whole picture. So let's say we were to apply that 5.3%, which is the here and now, and a couple of weeks ago it was almost 6%. So we're not even going to go there. Just look at the 5.3%. Let's see where we're at. So if you had paid 5.3%, your payment would be $2,083. You see the difference between them? $2,083. That is actually more than if you had 3% and the current prices of houses. You need to keep looking at not just prices, but interest rates, and buy into a time when interest rates are favorable to you. Right now, you have a brief respite, so prices are going sideways. Interest rates have come down for a small period of time, right before the key interest rates are raised again by the Fed, and that may have some kind of effect on your mortgage. So get out there, take advantage of this time. For the sellers, you need to be taking advantage of this time also, because with the market going sideways, there isn't much room for you to do anything else. You're not going to have that 30,000 over like your neighbor got 3 months ago. That market is past. We are in a new market now. We're still in a seller's market, but it's not as strong of a seller's market as we had 2 months ago. And if you've been waiting around to try to find some house because you don't want to be homeless, this is the time. Because with housing going sideways, you have more of a chance of getting into a house, even if you were to list your house now. I've taken 2 separate listings this week where the individuals are putting their houses on the market to get other houses. And guess what? They're not worried about it now because of where the housing market is, because it's going sideways. They know they're going to be able to find a house. So if you've been dreaming about getting out, now is the time before something else happens. If you're looking to buy, now is the time before interest rates go up. Same thing for if you're selling, because you got to buy that next house unless, you're in California and you're selling that house to move someplace else. Now I have some more videos for you guys to watch. Go ahead and watch those because they go into the depths of what's going on in the housing market so you can stay ahead. And if you have not subscribed and you felt you've received some value today, go ahead and hit that subscribe button. And if you need some help from us to buy or sell, information is below. We'll reach right back out to you.